Florida's real estate gold rush drew in 330,000 new residents and sent home prices rocketing sky high, as Governor DeSantis promised a new era of prosperity. The numbers didn't just look strong, they were record-breaking. The median home price in key zip codes doubled in just 30 months, turning modest bungalows into million-dollar listings. Developers broke ground on towers in Brickell and subdivisions west of I-75, promising thousands of new units to meet the flood of demand. U-Hauls vanished from rental lots. School districts scrambled to add classrooms. The state's labor force ballooned, with job postings outpacing available workers for the first time in a decade. Headlines declared Florida the new promised land. Record job growth, record home values, record net migration. For now, paradise still sold itself. But beneath the glossy listings, the cracks were starting to show. In Boca Raton, a three-bedroom that fetched $480,000 in 2019 closed at $975,000 by the spring of 2025. The ink barely dried before another offer landed, sometimes sight unseen. Out-of-state buyers wired deposits from hotel rooms or airport lounges, eager to lock in a Florida address before listings vanished. Sellers set deadlines. Inspection periods shrank from weeks to days, then disappeared altogether. Cash buyers swept up waterfront condos, skipping appraisals and offering above, asking to outpace the next highest bid. For every family squeezed out by a $100,000 escalation clause, another investor snapped up a rental property, betting on endless appreciation. In Parkland, a modest ranch listed at $650,000 drew 11 offers in 48 hours, half of them from buyers who had never set foot in the neighborhood. Agents fielded calls from hedge funds looking to bulk purchase entire blocks. Developers, sensing a once-in-a-generation windfall, bulldozed old subdivisions to make way for luxury townhomes with rooftop pools. Mortgage pre-approvals became a ticket to the show, but cash ruled every stage. By early 2025, more than a third of South Florida home sales closed without financing, twice the national average. Governor DeSantis called it proof that Florida was the finish line for America's Great Migration. But even he sounded breathless, as prices leapt faster than incomes, and bidding wars left locals on the sidelines. The market's heat was intoxicating, but the pace left little room for doubt. For buyers, the choice was simple: pay up or get outbid. For sellers, it was the easiest money they had ever made until the music stopped. 6 insurance carriers failed in Florida since 2022, leaving hundreds of thousands scrambling for coverage as hurricane season began. The average homeowner's policy now costs $6,291 in Broward and $6,170 in Miami-Dade, more than twice the national average. Premiums have exploded as private carriers pulled out or went insolvent. In 2021, the median annual cost for a standard policy in South Florida hovered around $3,200. By late 2024, it had doubled. The average single-family homeowner in Broward now pays more for insurance than for property taxes. Litigation has long been the wild card. Florida accounts for 79% of the nation's insurance lawsuits, even though it represents just a fraction of total claims. That legal drag, combined with relentless storms, pushed carriers to the brink. Non-renewal notices tripled between 2018 and 2023, hitting nearly 3% of all policies. For buyers, the math is brutal. Insurers require new roofs before writing policies, demand higher deductibles, and cap wind coverage. Some companies won't touch homes built before 2002. The pool of options shrank to a handful, and each new storm threat brings fresh restrictions. Every failed carrier means more policies dumped on citizens, the state-run insurer of last resort. Its books are now loaded with over 1.3 million homes, nearly 1 in 8 across Florida. For families trying to close on a house, the result is the same: higher costs, fewer choices, and the looming risk that one bad storm could topple what's left of the system. Citizens Property Insurance Corporation was never supposed to be the main pillar holding up Florida's housing market. Created as a last resort, it now shoulders over 1.3 million policies, nearly 1 in 8 homes statewide. Every failed insurer, every non-renewal, every policy too risky for the private market lands here. The numbers tell the story. In 2019, Citizens covered just 420,000 properties. By the summer of 2025, that figure tripled. The risk isn't just South Florida's anymore. Homeowners from Pensacola to Key West are tied together, their fates pooled in a single, fragile fund. Citizens' reserves look strong on paper, but a direct hit from a major storm could drain billions almost overnight. Premiums paid by today's policyholders might not cover tomorrow's losses, and if reserves run dry, every Florida homeowner, insured privately or not, faces emergency assessments. For buyers, this is the hidden cost of paradise. The entire state is exposed. One catastrophic storm, and the backstop buckles. Citizens was built for emergencies, not as the answer for a broken market. Yet here it stands, the frail guardian of Florida's most valuable asset, stretched thinner with every policy it adds. August 24th, 1992. Hurricane Andrew slammed into Homestead with sustained winds that reached 165 miles per hour, carving a path of destruction through South Dade that has never fully faded from memory. Entire neighborhoods vanished overnight. More than 28,000 homes were reduced to rubble, their foundations swept clean by the storm's compact, relentless core. Another 107,000 properties suffered major damage. Walls ripped open, roofs scattered like confetti, lives upended in minutes. In the days that followed, 180,000 Floridians found themselves homeless, forced into shelters, tents, or the spare bedrooms of distant relatives. The economic toll soared past $27 billion, bankrupting 11 insurance companies and erasing decades of growth in a single morning. Andrew didn't just flatten houses. It exposed the flaws in Florida's patchwork of building codes. Before the storm, local rules varied block by block. Afterward, lawmakers had no choice but to overhaul the system, setting new standards for wind resistance and construction oversight. Yet the scars of 1992 linger. For every new tower rising in Miami, there's the memory of neighborhoods that never returned. And for every insurance policy written today, there's the unspoken question: could the next storm be worse? Lenders and insurers moved first. As Hurricane Aaron's wind field widened to 575 miles and Category 5 warnings flashed across every news ticker, banks pulled funding for homes anywhere near the coast. Mortgage approvals that had been greenlit on Monday were yanked by Wednesday, with underwriters citing storm-binding restrictions and risk models that no longer penciled out. For buyers, the message was clear. Opportunity now meant looking inland or up the coast, where mortgage approvals didn't vanish at the first sign of a storm and closing tables weren't held hostage by the next hurricane watch. The Sunbelt's inland markets became the new finish line, not for a migration built on hope, but for one built on risk calculation. In 2025, Hurricane Aaron's 160-mile-per-hour winds and 575-mile-wide impact zone triggered the cancellation of over 21% of pending home sales in South Florida. More than 4,000 transactions stalled in a matter of days. This documentary has shown how a decade of explosive growth, surging home prices, and a fragile insurance market set the stage for a single storm to freeze an entire region's real estate. Documents confirm 6 major insurer failures and skyrocketing premiums, with Citizens Property Insurance forced to cover 1.3 million policies. While building codes improved after Hurricane Andrew's $27 billion toll, the question remains: can today's safeguards withstand back-to-back market and climate shocks? Some official records on policy responses remain sealed, and the long-term effects on migration and investment are still unfolding. What's clear is that South Florida's housing market, once a magnet for buyers, now stands as a warning of how natural disasters and systemic risks can reshape entire communities, not just in Florida, but across the nation.